U.S. President Donald Trump has announced Kevin Warsh as his choice to head the U.S. Central Bank, the Federal Reserve. He'll replace Jerome Powell, who steps down in May. Warsh is a Republican and a former Fed governor. The announcement sent the U.S. dollar soaring and the price of gold and silver plunging, apparently relieving concerns about the central bank's independence. Warsh is seen as favoring lower interest rates, lowering borrowing costs, in line with the wishes of Donald Trump. But the president, he denies asking Warsh directly to cut interest rates.
Talk about it, and I've been following them, and I don't want to ask him that question. I think it's inappropriate, probably would be allowed, but I want to keep it nice and pure. But he certainly wants to cut rates. I've been watching him for a long time.
All right, I want to pull in now Allie Kelly. She's a reporter for Business Insider. She joins me from New York. Allie, it's good to have you with us. We just heard the U.S. president there saying that he didn't talk about interest rates with Kevin Warsh. But, I mean, we can assume with certainty that there's no way that Kevin Warsh would have gotten this nomination had he said, I want to keep interest rates as is.
Absolutely. We have seen really uncharacteristic political pressure on the Federal Reserve from the Trump administration that we haven't seen in prior presidential administrations. And President Trump has been really vocal on calling on Jerome Powell to lower interest rates. Powell has taken a little bit more of a conservative approach at the risk of, trying to keep inflation down. And I think that, the president is in the position where he can choose who he hopes it can be the next Fed chair. In all likelihood, he's going to choose somebody that is going to follow his mission. We know that Warsh has a hawkish approach in the past to monetary policy. And I think that it's possible that if he's confirmed, we'll see that again.
And we know that he could be confirmed. He can be head of the Fed, but we know that the head cannot decide unilaterally about interest rates. I mean, the Fed governors, they talk and they vote. So can we say for certain that Warsh is going to mean that interest rates will come down this year?
We don't know for certain. Like you're saying, there is a full Federal Open Market Committee. They all have to vote. We're seeing more dissent in recent months, which means that the Fed typically, they all vote and many of them have the same opinion. And lately we're seeing a little bit more of split votes. I think that we can expect that if Warsh is brought on as chair. But at the same time, we have a lot of steps before Warsh is in that position. Republicans and Democrats have signaled that due to the pressure that the Trump administration has put on Powell, this Department of Justice probe, calling the Lisa Cook's case into the Supreme Court last week, this kind of pressure means that it's possible that Warsh won't get confirmed. And so that's something that we're really watching.
Yeah, I mean, you're right, because he still has to go through the process of being confirmed. Talk us through what lower interest rates would mean for the American economy, for the global economy as well, and why outgoing Fed Chair Jerome Powell, why has he been so reluctant to cut rates?
Definitely. So the U.S. Central Bank has two main roles, and one of those is to maximize employment, make sure that there are as much movement in the labor market as possible to keep that healthy, and then also to keep prices stable so that consumers are able to borrow money easily, companies are able to borrow money easily, that prices, stay in a really predictable place. And so there's this challenge where lowering interest rates could juice the economy. It could make the job market, which is really sluggish right now, go a little bit faster. A lot of banks and large companies are hoping to see lower rates because it would be easier for them to borrow money. But at the same time, that risks pulling inflation even higher than it is right now, and it's still above the Fed's 2% goal.
If President Trump were running for another term, do you think he would be so hawkish about interest rates? Because we know no sitting president wants to go into an election with sky-high inflation.
Absolutely. I think that it's possible. President Trump has really been consistent about wanting lower interest rates, even at the expense of potentially higher inflation. And at the same time, I think that he's really pushing this agenda of wanting to be sort of the affordability president. And at a time when consumer prices are really high, tariffs have raised inflation just a little bit. And Powell said just this past week that that elevated inflation that we're seeing, which isn't horrible, but is noticeable, is largely due to kind of this trickle-down effect of tariffs. And so it's some consistent messaging that we've gotten from the Trump administration, and I don't necessarily expect that to change. They just, in Warsh, they might have a Fed chair that is, more aligned with what the president would like. And I know that Trump has said that he would like the central bank chair to, consult with him more closely on monetary policy, which raises a lot of concerns for the bank's independence.
Yeah, independence. It's a big question mark tonight when it comes to the Fed moving forward. Allie Kelly with Business Insider. Good to have you on the program. We appreciate your reporting. Thank you.